Welcome back to Smart Money on CNBC TV 18. The big focus area for the government is energy transition, and we are here talking to a bunch of people from SBI Mutual Fund about how you can sort of benefit from this energy transition. Raj Gandhi, who is the fund manager at SBI Mutual Fund, and Ruchit Mehta, the head of research at SBI Mutual Fund, are with us. Ruchit, we were talking about whether the sector is prone to any risks from a regulatory angle, right? That is the other big question, because we've seen over the past, if you map the last decade or so, a lot of these companies that are PSU companies have not given the best returns. Of course, now the last 2 years are different. But if you just look at in hindsight, is there any regulatory risks that we're staring at?
Sure. I think energy sector per se, because it involves a lot of aspects such as energy security, something at a national level rather than merely at a consumer level, will always be prone to some or the other regulatory hangover, right? So one cannot truly rule out government intervention at any point in time. But mind you, this is not something that's unique to India per se right now. Globally, you've seen a lot of moves by governments to sort of make sure that energy prices don't go haywire. Like we have a windfall tax, it's something that a lot of countries have implemented. But as Raj also mentioned, an important aspect is that the government has moved away a lot on the reform side for the sector. If you think of it simply, right, earlier we used to subsidize consumption, right? You would have petrol and diesel prices being sold below what the market price should be, and the government giving a subsidy. Whereas now the government is actually thinking of, rather than giving consumption-led subsidy, to more investment-driven subsidies, right? So you're talking of the PLI for the solar panel work. The finance minister spoke about allocating 10,000 crores for the hydrogen sector. So there's a change in the way the government seems to be approaching this sector. So I think it is moving in the right direction. There will always be that small chance that somehow if energy prices go haywire, or if there are national security concerns, then some bit of heavy hand for the government could come through. But we would anticipate it to be more temporary, like we saw in the aftermath of the Ukraine-Russia war, rather than it being a sort of a permanent policy change that's there.
Okay. You want to comment on this? Yeah.
Yeah, so this is quite interesting. So here, we've seen power and oil and gas being, hit a lot of times with policy risk. However, to due credit to the government side, it's always been a forced error kind of a situation wherein all of a sudden you have oil price doubling due to war somewhere, gas prices spiraling. So what we've done here is, as and when you move to more renewables, which is captive and domestic driven, so the external turbulence which we see in a forced error kind of situation will automatically structurally come off for the sector. Also, what we've done, if you see across, kerosene consumption, which at peak was 40,000 crore of subsidy. Today, our kerosene consumption is just a fraction of what it was, because all was going to adulteration and we've stopped that. On LPG connection side, what we've done is through digitalization, we've ensured lesser leakages. Earlier, on your name, maybe you were using 4 cylinders and the agency was taking off 12 and selling to the hotel and commercial space. Now you pay full price for the cylinder, the subsidy comes straight to your account. So we've cut down with digitalization, we can see a Zomato app being there, but a lot of these sectors which are benefiting, but they don't come as apparent. But what we've done is that, through reforms, we've cut down the systemic risk here. Today, the petrol that goes in your tank has 15% ethanol, which comes from local sugarcane. So it kind of, to that extent, you are lesser impacted. On the railways, we were importing oil, refining that to diesel and using, whereas power is produced captively. So we've, from 2014 to now, we've doubled the electrification on the railway side. So I think what we've done is that, along with top-down measure to kind of take frequent price hikes and, control subsidies, we've done a lot of bottom-up work as well. And also what is interesting is that, the new, when we speak in Delhi and all, when we do our checks, it comes out very apparent they are aware of the political vote bank that a new energy has. Imagine lakhs of acres being bought and money in the pocket of the people. So it is a big boost to the economy.
Absolutely.
Today that money was going out and, not available for us as a sector, as a profit pool here. Now you will be capturing that profit pool here. It's money in the pockets of the people. When we do hydro in Northeast, we get renewable power, cheap power. Plus, let's say you control the flooding in Bihar and UP, parts of UP that you have every monsoon. You can control the flow of water. So, imagine the kind of vote bank any party can have if you say that, we've kind of controlled the flooding. And also I think there is a lot of economics as well as positive politics as we transition, which is where we feel, the policy environment would be much more supportive versus.
Okay, so the big question, right? Can India really attain leadership in the new energy space? And within the listed universe as well, what is the kind of opportunity that this presents? Ruchit, you want to take that?
I think for us, we have a large capability on the solar side of it, and that will be good for us to sort of build scale capacity here, and that can be used towards some of the newer fuel technologies such as hydrogen, right? Because to generate hydrogen, you need a lot of electricity as well, and coupling that with solar makes it green hydrogen. And hydrogen as a fuel can be transported globally in different forms. So I think if we do it correctly, then over the coming decades, then one can be a global player on that side of it. And that's an interesting area because you're seeing investments happen across all of the traditional energy companies, right? Being the oil marketing companies or the large refining and marketing companies. Everybody seems to be investing in some form or the other manner on the hydrogen value chain.
Okay, before we wrap, we're running out of time. I want to talk about a couple of more themes, but before that, you folks have an energy fund as well that's coming out, right?
Sure.
But my question to you is this, that at a time when there are many such funds like this in the market, this is a space that has sort of become a bit cluttered now, a bit well discovered as well. What makes your fund stand out?
So, as we stand today, there is no single pure energy fund. If you see the other peer set which is available, it's much more diversified in form of it being a more natural resource play with lot of metals also in it, it being more power plus infra. So, it has a lot more of cement and chemicals and lot other sectors. So, in terms of having an exact peer set which is pure dedicated to energy sector, probably we would be the only domestic fund here. Available, yeah.
Okay, that's interesting. But the energy index has been an outperformer, right? So do you expect this kind of performance to continue?
So, despite of it being an outperformer, what we've seen is that profit pool has also has come in. So, in terms of valuation, when we see, it's still reasonable versus where the market is. On December ending trailing basis, if you were to see, our energy index is still at 25% discount to the benchmark. And X of Reliance, which is a more heavyweight, the overall headline valuation across the sector is still reasonable. And where you have a complete new sector emerging, like how we are transitioning. In fact, it is a proud moment for us that climate change index has ranked India amongst the best in the G20 countries in terms of taking action on the climate change. So I think given where we are headed, given the advantage that we have, the valuation seems fairly reasonable given the potential.
Okay, just a couple of more minutes left. Ruchit, you want to wind down with any closing remarks on what the kind of opportunity is that investors have in this sector?
Sure. I think, if I were to pitch it to a customer, look, you have a sector which has fairly good long-term growth potential. You have a sector that's going through a fairly interesting transition period where not only will the sector see new players emerge, but also the incumbents will be able to play a significant part of the transition that's there. And as Raj mentioned about it, valuations are in your favor, especially considering where a lot of other sectors are trading at and the general market itself is trading at. So I think you've got a combination of good long-term growth and reasonable valuations in your favor.
All right, gentlemen, thanks a lot for joining me on the show. It was really a pleasure speaking to you and understanding what is the opportunity that we have in terms of energy transition.
Sure. Thanks a lot for having us here.
All right. With that, it's curtains down on this edition of Smart Money. Thanks a lot for watching.